It's that time of year again. Morgan Stanley have released their annual report of the status of the Swiss watch market. Who's up, who's down, who's succeeding, who's failing. I have a ton of thoughts, and I think I finally figured out what it actually takes to be a success. Let's dive in. Before getting into the meat and bones of this topic, there are two things that I need to cover. First of all, Morgan Stanley does this report every year. They are this massive investment / banking / finance firm that do an annual report on the Swiss watch market. There's one thing that really frustrates me about this report, and that is that it's a Swiss market report. It ignores anything non-Swiss if it isn't owned by some sort of semi-Swiss conglomerate. So for this report, we don't know anything about Seiko, Casio, Nomos, Grand Seiko, and a whole lot of others who just don't exist in this report. Companies like Lange & Söhne and Glashütte are there, but they are owned by other conglomerates, and that's why they get included. So in some ways, this is a report by Swiss people that have their heads up their own backsides, pretending that they are the center of the universe, as if no other watches in the world are produced. In fairness, though, how many brands that are not either owned by a conglomerate and are not Swiss that are not on the list? It's Seiko, it's Casio. They would probably be fairly high up the list. But apart from them, who else would there be? So the list is fairly accurate. Second, the list isn't freely available. I did a whole lot of lobbying last year, so I got a hold of the 2022 report. I don't have this year's report, but there's still enough data out there to have a really interesting conversation. JLC and Rolex. I've done quite a few videos about JLC. I've done that because I think they are a super exciting brand with a whole lot of potential, but they are also a brand that in my eyes are not living up to that full potential. They are probably the brand that has angered most people in the last year with ridiculous price increases and just generally having a bit of a lackluster overall product lineup. I own a Reverso, my wife owns a Reverso, so don't accuse me of being a hater because nothing could be further from the truth. They could be so much better though, and any negative comments I have towards them are because I want more from them. And I'm not saying these things from a position of general negativity or hate. JLC have massively increased their prices over the last years. In the report, the numbers I latched onto were 8,753, 9,323, and 12,218. The first number is the estimated average price of the sale of JLC models in 2023. In 2022, it was 9,323. The average retail sale price of the JLC models fell by over $500 in 2023. Now remember, they raised prices and their average retail price dropped. Clients' response to them raising prices was to buy even cheaper models. In practicality, I think what happened was that the mid-range male buyer chose someone else, while the more stable quartz watch buying female buyer stuck around. But based on the data, they have so far completely and utterly failed in driving up the average purchase price of their customers. They didn't even increase volumes. They may have become more profitable, but honestly, in a market where premiumization, where moving upmarket is seemingly the key to surviving, this is a terrible development. Sure, they kept their spot in the rankings, but the underlying implications are not good at all. Also, Cartier are more or less the only brand in the Richemont group, together with Vacheron, that are really doing well. JLC, Panerai, and IWC, who I'll get back to later, are all essentially underperforming. The last number that I mentioned was 12,218. That was the average price of a Rolex sale. Rolex is just so much better than this, making $3,000 more per watch than JLC. Rolex continues to dominate. You can hate them all you want. You can be frustrated by their lack of availability, but Rolex account for over 30% of Swiss watch sales. Rolex made more than 10 billion Swiss francs last year, and the average price per Rolex was over $12,000. The 12,000 is super interesting. The reason? A Rolex Oyster Perpetual has a retail MSRP of around $6,400 US. A Rolex Submariner 126610, $10,250-ish. Now compare this to Omega. An entry-level Seamaster Aquaterra is around $6,000-ish. A Seamaster 300M also is in the ballpark of about $6,000. The average price of a Rolex was, according to the report, 12,000-ish Swiss francs, which is about $13,000. According to the report, the average retail price of an Omega was about 6,500 Swiss francs, or $7,000-ish. So every time Rolex sells a watch, on average, the customer is buying a watch that costs double that of an Oyster Perpetual, and $2,000–3,000 more than a plain old Submariner. On the other side of the coin, whenever someone buys an Omega, they are basically either buying an entry Aquaterra or an entry Seamaster. Part of this, I think, is likely down to how Morgan Stanley calculates the average retail price. For brands like Omega, I think there's stock in the stores at the ADs, and I think that bleeds into the way they calculate the numbers. And since Rolex is mostly sold out, the Rolex average is going to be higher. But it doesn't change the fact that directionally, when people buy a Rolex, there are far more people that are willing to upgrade to a two-tone, an Oyster Flex, or a full gold model. People buy an entry Omega, but they upgrade on the Rolex. This is massively important. I've spoken about these upgrade paths so many times that I'm surprised you guys aren't getting tired of it. But the likely conclusion is that Rolex has built a lineup where people want to buy the upgrade. Sure, lots of people want the entry Sub, the entry OP, the entry Daytona. But if they can't get it, they'll buy a two-tone Sub, or a two-tone Datejust, or even a two-tone or Oyster Flex Daytona. I don't believe that this is in any way happening with brands like Omega. If you can't get the regular Speedmaster, what's your option? A basically limited edition Ed White or a full Canopus Gold Speedmaster? Omega and a whole lot of other brands are terrible at convincing people that their upgrade options are compelling, and they honestly don't really have a compelling upgrade path. Think of Apple, the phone makers. They're exceptional at this. Their mix of memory specifications, speeds, camera types, and all other features slowly force you up the funnel, and that's how Rolex works as well. The Morgan Stanley numbers tell me that if you can't get a regular Speedy, you just leave the showroom. You don't pay extra for the upgrade, if there even is one. This, in part, among other things, is definitely part of why Rolex is head and shoulders above the rest. If you walk in and you can't get what you want, you happily upgrade. IWC is not doing great, relatively speaking. In 2022, they were estimated to have sold 150,000 watches. In 2023, they sold 137,000 watches. That's a drop of 13,000 watches. In and of itself, that doesn't have to be a problem. A lot of brands like JLC that I mentioned before have made the gamble that higher prices will lead to higher overall profits despite lower volume, premiumization. But IWC revenue overall dropped and the overall average price of watches dropped. That's not good. The reason? There are macroeconomic trends affecting a lot of brands. That became especially visible towards the end of the year, but honestly, IWC is likely just too expensive, and the only really notable release of 2023 was the Ingenieur, which was overpriced. At this moment in time, it's not hard to get. I like it. I love the IWC Pilot Mark 20, but from a growth perspective, IWC had a tough year, and their dream of going upmarket has definitely failed so far. They don't have a competitive dive offering in their lineup. The Aquatimer is cool, but it's just not the look most people are going for. The Pilot Chrono Sport Performance whatever is also a mistake as far as I'm concerned. So I do think that they have some catching up to do in terms of product offerings. Tudor might not be the most interesting story for 2023 compared to JLC or IWC or Rolex, but I did note two things that I thought were, well, notable. I don't know, that's how I've had to put it. First of all, their average retail price is around $3,000. They are not like Rolex. People are not buying the upgrade models, the two tones, the gold, bronze, black bays. People are buying the basic models, which is where they quite honestly are at their best. Again, I think this is also the way Morgan Stanley does their calculations, and is impacted by whether or not the models are in the window of the AD and whether or not they're sold. But again, directionally, it doesn't change the conclusion. People like the basic entry black bays with no fancy materials. Secondly, from a volume perspective, they didn't really grow either. They may even have contracted a bit. That's what the volume seemed to indicate. And I'm going to throw this comment out there. Could the hype and rabid desire for Tudor be waning? My gut feeling is yes. Tudor has had a super impressive run, but I'm not sure they're going to be at the center of our or regular customers' attention going forward. Don't misinterpret what I'm saying. I'm not saying they're going to crash or fall or decline, but maybe, just maybe, people are becoming more interested in something else. Potentially also, maybe they also slightly overstep the line in terms of pricing as well. Tudor make great watches, but there is an argument to be made for them being too ambitious in terms of squeezing the last dollar out of these mid-range, highly value-orientated customers. Swatch, average watch price, 141. 5.8 million watches sold. In the top 10 for the first time in a reasonably long time. Why? Because of the Moonswatch and the Blancpain collab. Marketing works. We can hate on the Moonswatch all we want, which I think is unfair. Hating on the Blancpain, on the other hand, is ever so slightly more justified, mainly for me, because of the whole bioceramic and non-repairable movement thing. But the fact is, people are buying these things. We will see more collabs. End of story. For the broader Swatch group, it's a bit of a mixed bag. Omega technically maintained their third spot and maybe made a couple of 100 million extra on the top line. That's fine, but I honestly still see Omega as fundamentally being a little bit aimless. Aquaterra only models that cost the same as a Seamaster 300M, give or take, limited edition speedies that don't bring in the volume, and a catalog that has tons of cool stuff, but is just a bit of a mess, to be frank. The numbers don't lie. They are losing ground to, among others, Rolex and other brands they once compared themselves to. They grew for sure, but nowhere near at the levels of Cartier, Rolex, Patek, or any of the big players. As for Breguet, they're basically non-existent. Blancpain declined in overall units sold and in average retail price, which is terrible for that kind of brand. That's not good when the high end is trending upwards. So apart from Tissot and Swatch, it's a little bit lackluster. Breitling. I did a video on Breitling and the acquisition of Universal Genève. I said the following: private equity only has one goal: get sold at the highest possible price. You can do that by bolting on other brands, you can do it by cutting costs, or you can do it by growing revenue. Private equity is seldom focused on long-term stability. Breitling stagnated this year after a very long run of massive growth. They're having trouble with their bottom line, and that's not just because they bought Universal Genève. I know I'm coming across as a little bit cynical, but I do get the feeling that my thoughts on private equity ownership for Breitling are accurate. They have fixed their product lineup, but they are slowly starting to, or seem to have peaked, and now they're going to have to work on profitability. I would expect price increases at Breitling and cost cutting across the board, and fingers crossed, hoping Universal Genève can give them a bump in a couple of years' time. All the rest. On average, people are willing to pay $275,000 for a Richard Mille. That's not the highest number on the list, but I'll get back to that. AP commands $50,000, Patek $40,000. The absolute high-end brands that can convince people to upgrade are the winners. This was a slowdown year, especially towards the end of the year, but those niche high-end brands have demonstrated a model that works, and I would expect most others to continue to try and follow suit. Everybody wants to be in that uber desirable segment, but honestly, I don't think there's room for everybody in that club. Almost by definition, nothing can be exclusive if everything is exclusive. I think a lot of brands have been listening to consultants telling them to go high-end, to become Veblen goods, and I honestly think they are going to continue to alienate customers and ultimately have to course correct and realize that not everybody can position themselves as Rolls-Royce. Being Mercedes is fine for many, I'm sure. The low end is under pressure from smartwatches, and premiumization is definitely a thing, but most brands cannot be the next AP or Rolex. That's just the way it is. Now what else? Cartier continued to be badass. Vacheron actually had a really impressive year. They are definitely doing the right things, and I think I probably have to dive more into their lineup because it's a bit of a surprise to me, to be perfectly honest. I think there might be a little bit of tag along to Patek and AP going on, but still, they're doing something well. A couple more thoughts. Gros Belforce. They are in spot number 50, but they got an average price per watch that was the highest of them all, higher than Richard Mille. Over 310,000 per watch. They sold 255 of them. I've seen one GF so far in my lifetime. My personal verdict, totally justified. It's probably one of the only truly, really handmade watches of all of these 50 brands. And finally, Tissot. Tissot was the brand that I noticed the most. They had a pretty good year. They sold more watches, they climbed up the rankings. And do you know why? Because they produced watches that people want. It's not more complicated than that. JLC raised prices, tried to become more exclusive, but their product fundamentally didn't change. Omega faffed about with releases all over the place while also raising prices. IWC tried to convince people to pay a fundamentally exorbitant price for the Ingenieur and for other models with semi-in-house movements. The brands that tried the strategy of raising prices and skimming the fat off the top largely didn't succeed. Some did, but most didn't. And then you have Grübel Forsey at 310,000 per watch and Tissot at 400 per watch. They have more in common than you might think, because they sat down and said, let's invest in making something that people actually want to buy. And we did. That's all manufacturers have to do. Make something we like and we'll buy it. Those brands that faffed about and thought that customers wanted to pay more for their brand because their brand was inherently more attractive. Those brands that saw it as a marketing and a positioning exercise. These are the ones that lost out. AP, to be fair, have, for the customers they are talking to, a compelling product. Patek has a compelling product. Rolex, like it or not, there's a lot of branding there, but they do have a compelling product for the price. IWC, JLC, and a whole lot of others did not have a match between compelling product and price. The brands that succeeded remembered that product is key. Those that failed are the ones that forgot that product is key. I'm reminded of a Kevin Costner movie. If you build it, they will come. How is this so hard to understand? As always, share your thoughts in the comments, like, subscribe. Cheers.